Tell us a little bit about how you are navigating these rather turbulent waters right now.
Oh, so they are turbulent waters. I think what we're trying to do is, look, we realize I think equity markets have had a good ride, but the state of the recovery is precarious. I think when you talk to corporates in India, earnings are coming back, revenue is coming back, but there's obviously the set of concerns around inflation, rising input prices. So we're always telling investors to focus hard on their asset allocation and, even as a fund house, focusing on solutions that provide asset allocation to investors, because there's no one call you can take on debt and equities. And then on the fixed income side, as you said, it's been a wild ride, especially in February. We've seen bond yields rise about 1%. But we also think from an investor point of view, it'll be a very, very good time to lock in yields, with yields touching close to 6.5%, 7%, even in the quasi-sovereign products. So that's what we're trying to tell investors, that with bond yields rising, there actually may be a very good opportunity for medium-term investors.
So Radhika, I mean, the thing is that we have, of course, a situation where these bond yields are going up. We've got stimulus in the offering. And that brings us nicely to our question of the day, which is what assets will gain most from stimulus? And we're seeing stimulus right across the board, not just the US, but India as well as other countries.
Look, I think equities stand to gain, I think, with the kind of liquidity that we're seeing. And it's not just India. I think all emerging markets are slate to gain. So equities is clearly the asset class. I think in the Indian context, if you look at the recovery in the last 2 years, it's also been a very large cap oriented recovery. The broader markets in India have not participated in that recovery. And we do believe that the mid and small cap segment is probably slated to gain from the kind of stimulus and the kind of liquidity that we have out there.
Having said that, Radhika, taking a look at the earnings outlook for Indian companies, they had a stellar Q3. Is that sustainable going forward?
So I think it is Q3's earnings are more optimistic than Q2's earnings, because if you look at Q2's earnings, they were largely margin-driven earnings. Q3's earnings definitely have more of a volume growth element. I think as you talk to corporates, the one point of concern that comes up, as I said, is rising commodity prices and upping input costs. But if you see all segments of the economy in India today and you talk to promoters, businesses are coming back. I mean, even, industries that are very badly affected, like airlines and hospitality, when domestic tourism is coming back. So it gives you a sign that at least things are sustainable. I think the banking sector, which constitutes a large percentage of our benchmark, is also largely out of the woods.
But having said that, we saw, I guess, how markets are pretty concerned about easing liquidity given the recent sell-off. Is there concern at all that perhaps foreign investors, foreign funds, which have supported Indian stocks so far, may be pulling out?
There is concern that the pace of foreign investment that was very large in October, November, etc., may slow down. Whether it's pulling out, who's to tell? But could that slow down? Certainly. We also have a significant domestic market that used to be a large net buyer into markets. I mean, my own industry, we had about $1 billion of SIP flows. Unfortunately, for the last 6 months, that segment has also been negative. At least the initial signs we're seeing is that the domestic bleed might just taper off also.
Radhika, just quickly here, I mean, you are one of the only female fund managers there in Italy. I believe that women only make up 8% of the total number of fund managers in the country. What needs to be done to address that? And why is there such drastic underrepresentation in the first place?
Oh yeah, it's bad. I think fund managers, CEOs, anything in asset management, and it's ironic because we've had a golden history of banking female CEOs. I think you asked me quickly the reason why. I think it's our legacy. We come from the Lal Street and the broker-dealer mindset, where it was believed that women don't handle money. And that mindset has unfortunately continued at the top. Unfortunately, I think solving the problem at the top doesn't do anything. I really think you need to get more women in at the mid and junior level, and especially take care of young women in their 30s and 40s, which is a crucial time when women tend to drop out. So that's been our focus at Edelweiss AMC. We're about 27% women, and we have quite a few women in mid-level positions, but the hope is that we're going to try and grow them into senior level positions, because you really have to attack the next generation of leaders coming into this business.